But the size of the market is basically the dislocation between the Bitcoin future and the fiat present, which is a 1 to 200 trillion arbitrage. Firstly, a lot of people still, TradFi people are skeptical about the market strategy play, and they don't get it because it's hard to, because the enterprise value of the company is de minimis versus a Bitcoin at this stage. That company might be worth 1 or 2 billion historically, and it's sitting on 80 billion worth of, 45, 50 billion worth of Bitcoin and 85, 90 billion market cap, like at 2 times MNAV roughly. And so they're looking at it as a bucket of Bitcoin. That company is not a big part of that, and so they think it should trade at MNAV1. I'm like, no, it shouldn't, because it's trading at about 2 times MNAV now, but last year it achieved 73% increase in Bitcoin per share, and Q1 this year it did some more. So it's basically in the last 15 months already recouped approximately 2 times, right? So buying it 2 times MNAV last January be great, because now that's paid for, and they're going to keep doing the same thing for the next decade, and presumably they can do some more, right? So it's just basically, it's an arbitrage, because you can see that Bitcoin adoption is growing faster than the cost of borrowing. So if you can borrow money or do convertible notes or other things like that on a 5-year duration, anybody taking that bet thinks that Bitcoin is going to be higher in 5 years, and historically that's been a fantastic bet, right? And then the other thing somebody asked me was, well, but as more companies come into it, is the effect scalable? So there are some things which are not scalable. Like if you lend money into when you buy Bitcoin on margin on exchange, there's a lending market, right? And the interest rates are high. If a big bank comes in and lends $1 trillion, of course the interest rate is going to drop to the prime rate, because there's not that much of a shortage, right? So they're kind of saying, if there's too much competition in the strategy companies, does it ruin the opportunity? Like, do they arbitrage each other down to MNAV1 and that's the end of it? And my answer is no. That's complete misunderstanding. It's fully scalable, because what you're looking at is lots of people using lots of different strategies, individuals trying to save money, buy Bitcoin, etc. The aim of the game is to accumulate as much Bitcoin as you can, and within your your income and ability to access finance with a safe structure and stuff.
Let me break this down for my fellow Bitcoiners. In just 8 weeks, I've seen a serious shift. More strength, more energy, and fast muscle gains. The reason? FITSCRIPT. They ran 124 biomarkers, blood, hormones, inflammation, and built a fully custom plan: nutrition, training, supplements. No guesswork, no templates. This is functional medicine meets precision fitness for high-performing men who want sovereignty over their health. If you care about optimization the way you care about your money, test, don't guess. Don't trust, verify. Hit the link in the description or scan the QR code on the screen to check out FITSCRIPT and see what's possible.
But the size of the market is it's basically the dislocation between the Bitcoin future and the fiat present, which is 1 to 200 trillion arbitrage. And so the more people that are attacking that arbitrage, the faster it will flow, and the more of a tipping effect you'll get, and the more effective it will be to operate a strategy, because if Bitcoin's growing faster, that strategy is more effective. So of course, eventually, when that arbitrage is fully played out, Bitcoin is much bigger, so that Bitcoin is not growing other than at the rate of inflation and population growth and productivity improvements, then it won't work as well. But while it's going through an adoption cycle and this arbitrage is happening, then I think it's vastly scalable. Like, all of the public companies could do that and do it for years to tear that down, right? So more is better, I think, in treasury companies. Yeah.
I agree. I think it's in theory, of course, it's very scalable. I think that a lot of it depends on time horizon. The complexity around it comes down to the distinction in market value to net asset value is predicated upon an expectation. And those expectations can create a convexity, not in the sense of like directly with like fixed income investments, but convexity within. There is a multiple derivative relationship to the price based on these variables. And to your point about where you're describing, the more the better, drives demand for the asset, continues to go up. I just think that the risk is that this type of a system in a vacuum makes a lot of sense. And it will continue to make a lot of sense because Bitcoin is valuable and Bitcoin will continue to be valuable. But the risk is that there's exogenous variables on the system that can also quickly reduce liquidity in the capital markets, which is a huge part of the expectation that underpins that distinction in MNAV. And that can result in a similar degree of convexity to the downside. And then the question turns to, well, what is the solvency of the institutions that you're involved in? And
so, I mean, maybe you're saying like it exhausts the convertible note market, exhausts the bond market. But I mean, we've got a ways to go for that. But like you said, the convertible note market, it's taken a surprising amount of it, right? But also, that convertible note market will grow if there are better instruments. And MicroStrategy is a more attractive instrument. So, people could reallocate that for income or something, which isn't doing much. I mean, fixed income is losing much cost in inflation-adjusted terms, right? But at least on the asset price inflation.
Yeah, that's a good point. That's a great point that because it's aligned with what we're seeing just more broadly in credit as well. Like we're talking with, there's all this huge new trend of people wanting to structure products and have Bitcoin associated with them in some way, shape, or form. In some of these products, I don't care because it's good for Bitcoin, but a lot of them just like categorically don't seem to make that much sense. It's more like, well, you should just buy Bitcoin. And if you also want to own real estate, buy some real estate. And of course, there are things that make a lot of sense. But what I think is happening is that there's classes of investors that have mandates and they're specifically designed to get exposure to particular areas. So it's all of these constraints and this friction put around how investors actually work that create demand for these unique structures. Like in theory, you're like, well, why wouldn't I just buy Bitcoin? But when you look at how these investors actually work, it's like, well, they're forced to kind of operate within these constraints. So if you can get Bitcoin within those constraints, then they're going to buy that. And what we're going to start to see is all these REITs that have Bitcoin associated in their allocation, and they're going to be in the top performers of the REIT category. And all the REIT funds are going to have demand for that. And so on and so forth throughout all these other different forms of credit. So like, yeah, Adam's point is huge, is that fixed income has been underperforming. And you have all of these capital managers who are trying to find ways, well, this is what I've done my whole life. And I'm a fixed income investor. What else am I going to do? And they're all looking for a bit of a lifeline under the current macro environment, and associating Bitcoin into their portfolios in some way, shape, or form is probably going to expand that market of investment for them as well. So there's a large top on it. The question is more just how much risk do the people that are taking on the leverage take on? And I think just like in any growth period of any market, there's going to be an expansion and contraction. And it could be a very, very large expansion.
Bitcoin Well is the best place to be buying and selling Bitcoin in Canada and the US. And now with Bitcoin Well Infinite, it's also the best place to be making large buys at their OTC desk of over $50,000. Their white glove service gives you fast transactions, no slippage, and the lowest fees. You can scan the QR code on the screen or simply head to bitcoinwell.com/BTC sessions to sign up today. And you can share your own personalized referral link to earn commissions.